Everybody, welcome back to another episode of the Steady Wealth Podcast. Today we're going to talk about Bitcoin. Actually, we're going to talk about Bitcoin in a bit of a different way through the lens of an ETF that is actually protects to the downside. And I have with me today Matt Kaufman from Calamos Investments. Matt, thanks for being here. And how are you?
Hey, Serge, I'm good. Thanks for having me. Appreciate it.
It's great to have you. So people who will never know otherwise, unless I tell them we recorded this before, and then my browser messed up. So Matt is kind enough to come back and give this another shot.
Oh, that's happy to
Matt,
do
if
it.
you just want to give us a couple of words on you and your company, and then let's talk a bit about a Bitcoin. Because one of the things that Bitcoin does have is a lot of volatility. So we want to address that a little bit here today.
Yeah, I'd love to do that. Calamos is a risk manager. We are one of the largest risk managers in the world. We've been around for quite a while, longer than some of the larger institutional managers you might think of, like BlackRock, things like that. So Calamos was started in 1977. The options marketplace, the Chicago Board Options Exchange, was founded in 1973. So just a few short years later, Calamos was founded largely on a foundation of convertible bonds. So if you are not familiar with converts, those combine a corporate bond to a call option on that stock. And so if the stock's performing well, the company's doing well, you start to look like its stock performance. And if it's, the share price is going down, you start to look more like its bond. So we've been doing risk management for quite a long time. We do things on assets that are very liquid, so we can do risk management on the S&P 500, NASDAQ 100, and Bitcoin is now one of those liquid assets that we're able to deliver risk management on. So that's what we did. Just a few weeks ago, we launched the world's first protected Bitcoin ETFs. The way I like to describe it is Bitcoin with a safety net, and you can choose where to set that level. We have a 100% protection product, CBOJ. We have a 90% protection or a 10% floor, so you can lose up to 10%. That's CBXJ. And then we have one that you can lose up to 20%, and that's CBTJ. And your upside opportunity just grows with how much you're willing to put at risk. So
Yeah.
that's the product set that we've built. We've seen a tremendous amount of adoption in these ETFs, and it really is to serve as a bridge for those looking to get into Bitcoin or even accessing Bitcoin in a more traditional way. We can talk through that as well.
Yeah. Fantastic. You just mentioned a few ticker symbols. I just want to make sure people realize those are ticker symbols, right? You're not just giving us some sort of a code to a vault. Those are ticker symbols, ETF ticker
Exactly.
symbols. And uh, uh, maybe just before, since you mentioned it, let's just quickly go there and then we'll talk about Bitcoin in terms of
Sure.
volatility and all that kind of stuff that I think is very much front and center in people's minds. When you talk about, let's take ticker symbol CBO, sorry, just had it. What's the 20%? Oh, here I got it.
CBTJ.
CPTJ. That's right. I got it
Yeah.
on my screen here. Just need to
Yep.
look at it. So essentially, what you're saying is that the max, if I were to buy that ETF, maximum I could lose as an investor is 20%. Meaning if Bitcoin goes down 20% or more, I can't lose more than 20%. What is the upside? How do if someone was to decide between that ETF and another one, and I should quickly also say for I guess compliance reasons, none of this is meant to be investment advice. It's purely educational.
Sure.
I'm not paying Matt. He's not paying me. I just happen to think these are cool ideas. So we're trying to inform everyone that these things are out there. But maybe just walk through that a little bit. We can always touch on it again later. But since
Yeah.
we already mentioned the tickers, let's quickly knock it out.
Sure. So we build these with what we call, I would call them outcome-based ETFs. So they're designed to deliver the upside of Bitcoin to a cap rate. There's no free lunch. So the more risk you take on, the higher upside you can get. And so we deliver this over a 1-year outcome period. We're using options positions to enter into these trades. And so those expiration dates are all 1 year into the future. So we launched on February 4th. And you have a 20% floor or 20% max loss layer over the next 365 days. And then your upside cap rate was 51.5%. So if you bought in on February 4th, you'd get the upside of Bitcoin to 51.5%. with 20% at risk. So pretty good trade-off there of downside risk versus upside opportunity. And then because these are ETFs, CBTJ trades in the market every day. So just like any stock, you can buy and sell this. You can go to calamos.com, go to our website, and see exactly where CBTJ is trading. So if you were to buy CBTJ today, today is March 10th, Bitcoin has come down about 16% since we launched on February 4th. So CBTJ is down in that floor zone. So the trade-off is actually a little better than when we started. If you were to buy CBTJ today, you would have a 62% upside cap rate, and you have about a 14% floor. So you've got a better or improved floor. You've got about 10% more upside opportunity. So we're seeing people move into CBTJ even today. And again, not a trade recommendation, just showing you where the flows are going.
Sure. No, that's very interesting. So just make this clear. So you launched a number of weeks ago. As we're recording this here right now, typically there's a number of days, maybe a week or so lag between recording and posting. So people will be looking at the back of the conversation that we had a little earlier. Is the floor set once a year? Is that what you said? I just want to make sure.
Yeah, that's right. So these are designed to deliver that floor annually. You'll still have that protection layer. But again, this is designed as an annual options reset. So the ETF will never close, and the options will just reset year to year. So if you hold this long term, you're going to have a 20% downside floor every year, year after year. Your upside opportunity just gets reset every year as well. So that's how the products are designed to deliver. And we can walk through the options construct if you want. I'm not sure how your viewers would accept that, but happy to do it if you think it's valuable.
Yeah, no, I mean let's just again so Bitcoin is now X% roughly. Again, every day is different, but let's say about 16% below when you launch. So technically, if someone bought today, there's only 4% downside they'd have to absorb.
Well, that's correct. As far as the Bitcoin price movement, Bitcoin is down 16%. Yeah. The ETF is only down about 6% right now.
Right.
Because you've got that 1 year outcome period. But yeah, Bitcoin is down almost 20%. So we're seeing some opportunities there for folks.
Yeah, exactly. Very good. Okay. Well, let's shift gears a little bit and kind of see where this goes. But one of the main things that I find attractive to this when I talk to clients, that are in the markets of all different demographics. A lot of them are sort of 50 plus, and then you've got different cohorts of sort of 20-year pockets. The investors that are sort of 50 plus, maybe 55 to 60 plus, a lot less interest in Bitcoin from what we're seeing in our view, right? This may not be representative of the entire population, investment population. But there's plenty of interest and it's growing. But the main concern is the volatility. Right? And that makes sense. As you're older, you are willing to less adjust. You have to adjust, or one should probably adjust the portfolio a bit more to risk. How do you, if you talk to someone who wants to invest in Bitcoin, right, and they're concerned about volatility, which rightly so. I mean, the thing's got a 60 vol right now. Still, it's way down, but still. How do you kind of maybe explain that, and B, help them walk through it? Again, I think these ETFs are great because they're limiting the downside potential. Yeah. But just in general, like, why does it exist, and how should they maybe think about it?
Yeah, I think the story of Bitcoin is largely a story of innovation. It's a big breakthrough in how we think about money, value, trust. It's turned into this incredible store of value. But I think, like you said, a lot of people have watched from the sidelines as digital assets have evolved from, what we would call an experiment to an institutional reality. People have recognized that potential, but they're questioning the risk. We've appreciated the innovation, but people are demanding protection, especially that older crowd, as you alluded to. But I think people want to participate in the future. But a lot of folks want to be responsible and preserve wealth in the present. And so you hit on an important point. As you're younger, you have a behavioral, call it issue. You need to stay in the market. Time in the market is your friend. You can capture the volatility of assets like Bitcoin, of the equity markets, and you can ride through those storms. You can weather the storms. But as you age, you become more of a mathematical problem as opposed to a behavioral problem. And that's just the pure fact that as you get older and start to use your portfolio to provide for yourself when you no longer work, volatility can combine with portfolio withdrawals in a very toxic way. And so that's largely why a lot of folks have relied on fixed income as they entered retirement. But that trade has not always held up very well, especially in that low rate environment that we've just come out of. And so this really allows people to now access Bitcoin, but do it in a way that works for them. You can get Bitcoin without all of the volatility. And so what we've done is really open up the whole portfolio now. So you can, put some Bitcoin exposure in sell out of maybe some bond exposure. Maybe that's the 0 or the 10 floor. Or if you're in the equities, you're selling out of some equities and moving into the 20 floor. The way that a lot of leading asset managers are talking about Bitcoin exposure right now is to size your portfolio. Maybe it's 1 to 2% into Bitcoin. The reason that they'll say 1 to 2% is because anything above that is going to add undue risk to the portfolio. Well, the other way to think about it is, what if we take the risk out of the asset? What if we take risk out of Bitcoin, still give you meaningful upside, and now it allows you to either add more Bitcoin exposure. Maybe you've been in Bitcoin. Some listeners are maybe Bitcoin millionaires, and congratulations to you if you are. But this might be a way for you to protect those gains. Stay in Bitcoin, but move into the protected version.
I think that's actually exactly what I wanted to get to, right? So what we're hearing from a lot of people is exactly what you're saying. 1 to 2, 3%. Again, not recommendations here, but that's what people say. So if you think about, if we can add some Bitcoin to a portfolio through the lens of a protected ETF, which hedges some downside, it allows you to maybe sleep better and just even increase the position size. So I think it's a really important thing for people to be interested in. In fact, I'm just going to just for a second expand this idea, because when you think about, a lot of people try to create their own hedges in a portfolio, and typically are pretty quickly finding it challenging, unless you have a linear bull market where the stocks go up just because the sun rises. But as things become more volatile, they find that it's really not such an easy thing to do, which I think broadly, and not necessarily needing you to agree or disagree, I'm just kind of wondering if you have a reaction to this. Why not have protection in a portfolio in general? In this case, it's Bitcoin, where the volatility certainly, could demand, again, can't give advice, but could demand some. What about just S&P 500? S&P 50% in 2 years. Now we can't have a down year.
Right. I agree. I think looking at Bitcoin in particular, exhibiting volatility 4 to 5 times what you might see from an equity portfolio or, the S&P 500, you can now use that volatility to your benefit. You don't have to think of it as a risk measure, but you can think of it as a power source. And so if you take let's take the 100% protection product. What are your options for 100% protection today? You have a CD, maybe it's money market, maybe it's a treasury bond. 1 year treasury rates are about 4% today. So you could buy a CD, 1 year CD, it's going to pay you 4% guaranteed. And then you're going to pay ordinary income rates on that. And so that's going to turn into about 2.5% to 3%. So that's your risk-free rate. Well, now let's look at Bitcoin. What is the cap rate for a 100% protected Bitcoin strategy right now? It's about 12%. So you can get about 3 to 4 times what you might get on a risk-free rate product and use Bitcoin as your power source. Now, Bitcoin has to appreciate by that much in order for you to earn it, but Bitcoin can go up 12% in a day. It can go down 12% in a day. But, over time, let's say 1 year from now, if you think Bitcoin's going to be higher, now you can actually, it's a little bit of a mind bender, but you can take that cash and move it into something like protected Bitcoin. And then you can think of it that way, or you go up to the 20% floor and you think of that moving your equities over. I think the leading thought right now is to sell your Mag 7 exposure in order to tie into 1 to 2% of Bitcoin. I don't know many people that just have those 7 stocks laying around that they want to then turn in. A lot of people also don't want to turn those in. I like my Tesla. I like my Nvidia. I don't want to give up all of that growth potential and trade it in for Bitcoin. You don't have to do that anymore. Now we've taken the volatility and given you measurable exposure. And the reason I said we can harness that volatility is, one of the options layers, the way we get to a cap rate is by selling an out of the money call. Well, when you sell an option, the volatility premium works in your favor and you collect, a lot of money that way. And so we're able to deliver a high cap rate because the volatility of Bitcoin is working in your favor. So here we're taking all these things that people tend to think of as risk measures, and now we're turning them into measurable opportunity things.
I just think, a lot of people just would sleep better I hear two things from a lot of people. A, hey Serge, I haven't participated in any of these big moves, Mag 7s, NASDAQ 100, Bitcoin, any of them over the past 10, 15 years. But man, I'm afraid of the volatility, right? So this is again where something like this just makes a lot of sense because A, you can participate in the upside. B, you are protected. And guess what? You don't have to be trading options all day long. And this comes from someone who I'm very proactive in a trading account, but of course, most of what we do is investing. I think it just helps people sleep better at night.
I totally agree. And there's a picture to that phrase as well. If you look at the distribution of returns for the S&P 500, it looks like a very traditional bell. Most of your returns are centered around 0 to 15%. You have some on the right tail. You've got a lot of fat left tail there. When you go to Bitcoin, it's the inverse. It looks like a smile. It's all feast or famine. It's 40% or more up years, 40% or more down years. And so that's why we built the floor strategies. When you want to protect against Bitcoin drawdowns, you have to protect against those really severe sustained drawdowns, the 50, 60, 70% drawdowns. And so the floor will help you sleep well at night because you've chosen ahead of time how much money to put at risk. Do I want to put 0%, 10%, 20% at risk? And knowing that ahead of time, you've locked in that decision. You've decided for yourself. And now no matter what happens over the next year, you've chosen to put that much at risk. And so that's a very comforting factor. So I bought CBTJ. I like that trade-off profile of 20% downside, 50% up. Bitcoin went down 15%, almost the next week. In a normal environment, if I didn't have protection, that would make me sweat a little bit. But here, I didn't have to worry about it because I've already chosen, and I know what my max loss layer is.
You've accepted the risk you're willing to take.
Exactly.
I think it just speaks, Matt. It really speaks to I think you guys have really thought this through, and I think it speaks to something that at this day and age, as we're here in first quarter of 2025, we've had such a low volatility environment, and you take out maybe a few months in 2022 and about 3 weeks in 2020, and then you really have to go back a lengthy period of time, and even then we had V-shaped reversals, right? So people have kind of, and then I'm talking about more even institutional investors I speak to, but I'm mostly speaking about the do-it-yourself, or at least part-time do-it-yourself, or they look at volatility as sort of like that's just the same across not only different stocks, but different asset classes, which of course is not the case. And that can work in a low volatility environment. When that changes, it's a very different ball game. So I think, I'm hoping both for them and certainly also for you guys, that people wake up to this a bit more, because we are in a different level of dynamics as far as the environment's concerned.
Oh, I agree. Yeah, if you look at the interest rate environment that we were in after the financial crisis in 2008, interest rates went down to zero. You entered this environment. You talked about V-shaped markets. Those were large in part because of that Fed put that was in place. Markets would become risky. The Fed would cut rates and everything would settle back down. And so you'd get these like spurts of volatility. But ultimately, it was this prolonged period of really low vol spurred by the Federal Reserve's artificially keeping interest rates lower. As we came out of that, I think people, still have that mindset that, the Fed will continue to, work off of the equity market volatility. And I don't see that, happening as much as it was back then. It just doesn't seem like it's playing out the same way.
I would agree. People get, and it's hard to blame people for getting, I guess, somewhat complacent,
Sure.
maybe very complacent. It's something that's worked for so long. Like it's not like it's been 2 years. It's been like a decade plus.
That's right.
And so when those environments shift in a meaningful way, it's, and this is for the same thing for the pros or for people at home. You kind of do that trade until it kind of breaks trend or whatever, however you measure it, right? And so I think it just makes a lot of sense for people in general. Again, not advice here, just the lens of education, but to look at protecting portfolios in different ways. And I think certainly what you've got going on here with CBTJ and the other couple of ETFs, just to me, makes a lot of sense, certainly as far as the ETF, the Bitcoin universe is concerned. So.
Yeah, we think so too. We've been managing risk for again, about 45 years. Bitcoin is now a stable asset. It's a $2 trillion market cap asset. It's the seventh largest asset in the world. So we have Bitcoin as a really large asset. It has spot Bitcoin ETPs. There's a liquid options marketplace. So you combine all those things together, and we can now create a risk managed version and risk managed access to Bitcoin. So it's something we're excited to be able to deliver to the market. We're seeing some high adoption early on already, and I think the future is bright here.
Yeah. No, it would certainly would seem like, and maybe just you quickly, last point here, you speak to volatility, just so people have a little bit of perspective. Bitcoin, obviously, as you say, it's volatile. But historically speaking, the volatility of Bitcoin has probably been closer to 80 to 90. Obviously, we can't rule out another big spike like that, but vol has slowly but surely over the years subsided to the point now where it's still volatile. It's still a 50, 60 vol, but the institutional adoption and just general adoption, I think, is bringing volatility down to levels that are a bit more acceptable to people's
I think you're witnessing the maturity of a new asset. Bitcoin's been around for 12, 13 years or so. It was extremely volatile early on. We have not seen those 50 to 70% drawdowns in a few years. If you're a student of history, it's happened every fourth year in Bitcoin, and we're approaching that fourth year. It will be interesting to see if that repeats itself or not. That certainly would contribute to an elevated rise in volatility as well. But even at a 50 to 60 vol, you're seeing, again, cap rates right now in the 50 to 60 range for that 20 floor. So still a better upside opportunity than you'll see anywhere else in the equity markets right now.
No, we would certainly agree. Well, listen, Matt, I've really enjoyed the conversation. And again, I hope everyone takes a minute to check it out, calamos.com, and then check out CBTJ, the ticker of the one that we discussed, and a couple other options. Again, not a recommendation here by no means, and no one's getting paid here. Just think it's an interesting idea for people to kind of expand their horizon a bit past the Max 7s and other things that have been sort of the focus of the past. It's been a great conversation.
Appreciate the time.
Thanks, guys. Appreciate it. Hey there. I hope you found this video helpful. Now, please make sure you click up here to get much more of our great videos, our great insight into the markets, analysis, and excellent interviews with professional traders and investors.